If you're not using lagging indicators in your trading, then you're doing it wrong. You're leaving a lot of money on the table. What's up, everybody? Chris over here. I am the founder of Pollinate Trading. And today we're going to talk about lagging indicators. Yep, lagging indicators, the thing that happened in the past, and tell you what's going on in the bigger picture, not the little squiggly line that's telling you what's going to happen today. I'm talking about the big picture. And if you're not using lagging indicators to help you identify the market regime and give you the best idea of the possible outcomes going forward, you're leaving a lot of money on the table. You're basically using these little squiggly lines to signal, hey, something's about to happen right now. I need to jump on it. Or, I don't know what's going on or whatever. But you don't understand the bigger picture. You don't understand the context of the bigger picture. Currently, we are in the day after the elections in the US, and who knows where it's at from here. I'm not really dialed into what's going on at the moment, focused on helping the members of the lab navigate this. Plug for the lab. If you're unfamiliar with what the trading lab is, go to pollinatetrading.com/lab. You can get signed up. It's a group of prop traders, hedge fund traders, very experienced professional traders, helping each other become better at our job of trading. And that comes to systems trading in options, stocks, futures, currencies, Forex, and crypto. We got people doing strategies across the board. And what's great about it is if you need help, everybody here is a mentor. We work on the mentor apprenticeship program. So if you're new, you learn from another mentor in the group. They help bring you up. And what's great about that is that once you get that skill level, you become a mentor and you help other people work their way up. And we're constantly helping each other. We got people like Grant, we got people like Kyle. We got all sorts of guys in there who started with me in the very beginning and now are building their own systems and building it with other members, and they're helping build their systems for them too. So it's a great place to learn. Like and subscribe if you haven't already. That way you can get notified when we do these videos. We're doing a whole series on market regimes and how this helps guide us through it. So let me get right into the current situation that we are in. Yep, NASDAQ futures. There we go. Okay, currently we are day after the vote. Election hasn't really been counted yet, but we're up on the NASDAQ. We're up almost 5%. It looks like it's been up over 5% on the day already. That started last night when it started to different people and different politicians started winning different districts and different things started going through. So it's just been a steady pump ever since. Why is that interesting? Well, we've been talking this week about market regime. Market regime firmly in a bull quiet. Okay, we saw the moves down. We saw this breaking sideways, and we knew that we were getting down to the bottom of that range. We talked earlier this week, and we've been talking all week about this range that we're in. So no matter what the news that was coming, we're already at the bottom of the range. And with this lagging indicator, the SQN, on our side, it's telling us, you know what's going to happen. News is going to get bought, whether it's bearish news, whether it's bullish news, whether it's neutral news, whatever it is, it's going to get bought. Now, that's not to say it's going to tell you when to buy. That's the hard part of trading. But if without the piece of understanding the market regime and these big lagging indicators, they tell you the temperature and the direction and what positive news is going to be translated as, negative news is going to be translated as. I'm sure you've been watching earnings season and you see a company come in and say, hey, yeah, we're, great earnings expectations next quarter are going to exceed. Everything's going great. And they get dropped like 5% because maybe they were a penny off on their expectations, or they said one thing in the news or in their thing that was a little bit off and investors took it as wrong thing. That's because they weren't in the proper market regime. What we have is a bull quiet market regime. We talked about this one yesterday. What the bull quiet market regime does is it tells you that you just need to find excuses to buy. Now, the thing that makes this really interesting is we've just come off of these massive rips. Coronavirus scare, massive liquidation on everything, and then a bull quiet market regime that just brought us all the way through. Now, the part that makes lagging indicators so important is you have to understand price action. Indicators are only there. Indicators are they're training wheels. They're there to help give you information, but they are a derivative of price. They are not price. Price is truth. It is trading at 11,780 right now. The NASDAQ futures, the December contract of 2020, is trading at 11,780. That is a fact. Every second it changes, it's 11,781 right now. But regardless, that's truth. Everything else outside of that, all that's trying to do is put framework around it for you. Now, the best indicators are the ones that give you context around where you're at. They're not the ones that tell you, oh, we curled over here, so sell here, or we're curling up, so buy here, or we're above the zero line, we're blah, 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 blah. All of that, that's all derivatives of price. So if you don't understand how to read price, then you're just basically guessing on indicators. So the thing is I know a lot of people that go out and they get some nice back testing software and they they stack together a handful of indicators and they optimize for the settings. So they'll put like a MACD on there and they'll optimize for like a 2, the 12, 26, and 9 is the normal settings. They'll put in, 1 through 50 on the first setting, 25 through 100 on the second, and 1 through 20 on the third, and then hit optimize, and it'll just and find the optimized thing. And then they'll throw on a stochastic or volume, or they'll throw these weird mixes of indicators on there, not paying attention to what the underlying math behind the indicator is, just saying, well, it looks like this weird concoction of a 5-day EMA and a 2 million period leveled oscillator turns out has a 72% win rate, a 92% drawdown. But if you look at the curve, if you never realized the loss on the drawdown, you would have made cajillions of dollars. True. But the nuance is in the detail, right? The details there are the drawdown, the profit factor, your win rate. If you have a beautiful profit curve and you have a 20% win rate, it's really hard to get punched in the face 8 times in a row before you make 2 winners that kind of move you above the midline. You had $100,000, you take 8 losers in a row, so you're down to about, $80,000. And then in 2 trades, you make $22,000. So all that pain to make $2,000 profit. That's what a lot of those systems do. If you don't understand the underlying math and reasoning behind the trading strategy that you're looking at, if you don't understand that 80% of the time breakouts fail, 20% of the time they run, and usually by the time you figure out that they're running is when you're trying to get in, so you're actually trying to enter a breakout late in the phase, all 3 of those go from high win rate, medium win rate to low win rate. And where most traders are focusing is on the medium and low win rate, high reward status. And it's a tax. It's a tax on your inability to do math. If you can't do the math behind the probabilities and statistics of trading distributions and outcomes, then it's a lot of gambling. And by gambling, I don't mean the gambling of like you have odds in your favor or something like that. What I mean is you're literally just putting coins in a machine that you have no clue, and you're just hoping that the proprietor of this casino is nice enough to issue you $50,000 profit because of the nickels that you're putting in there. That's basically what you're doing if you don't understand the underlying math behind the indicators you're using. Now, if you're using price action, then you don't need as much math to help you. Math is a very simple subject. And it's truth. But the thing that people get scared about math is they get into calculus and these complex algorithms that really don't make any sense. If you stay away from that stuff and if you don't know anything about that stuff and you stay away from it, you're probably going to be good. Stochastics are that's a calculus. That's not entry level algebra. Yet people are throwing on stochastics on their charts and they don't even understand the underlying math behind what it's trying to tell you. Easier is to figure out what price action is telling you. When a bar opens at the bottom and closes at the top, very bullish. When it opens at the top and closes at the bottom, very bearish. That is some very simple, not even math. That doesn't even require math. That's just simple. Hey, this opened at the top up here, looked kind of bullish, and bears really took control, and they just, took us down 3.5%. That's pretty bearish. Doesn't take a rocket surgeon to figure out that that's bearish. And that's the thing behind price action, is it gives you these answers. But price action is like you're getting the day-by-day weather. Okay, that's what price action does. It's just not interpreted for you. It's not in a pretty little app where you open it up and says it's going to have a high of 88 today and sunny skies and blah, blah, blah. What it's saying is that you're going to have some pretty good temperatures today. Now, that's what price action gives you. And then you kind of can deal with the details. Okay, I know that about 12 o'clock middle of the day, we're probably going to be heading towards the warmest types of the day. I know that sort of stuff. So let me add to that. And all these things stack on. That's what trading price action is all about. But if you didn't know what calendar month you're in, and you didn't know what season you were in, then just knowing that, it's Tuesday and it's usually warmest around the midday and all that, that doesn't help. And this is where the higher complex knowledge of these lagging indicators can really move the needle. What they do is they keep you from jumping into stuff that doesn't really matter, and they let you wait until something that does matter actually arrives. So when we look at the last couple of months in the NASDAQ, we realized that we were in a bull volatile market regime over here towards as we were coming to the end of August. There was a couple other things, and I put out a video and I put out an email and a blog post and about 1,000 tweets explaining why we were topping and that we were in a market top for a short-term period for however long that is. So I went and hedged my positions. Some of the traders in the lab got short. Some traders just exited completely. And we went ahead and we hit the expected 13% pullback. That is mathematically, we've done the statistics. We know we've done the work in the lab. We knew what we were up against, and we started covering our short positions down here and started looking to buy. We started buying here, bought here, and bought here. And I added here. Now, this was the last one that kind of was that it didn't turn out in our direction. This, that was, where was that one? I think, okay, so let's call it here. This is the one that we didn't add here. So that brings our average price up into this general area here, which we came down and we felt some pain on. But what I knew is that we were in bull quiet. What else did we know? We knew we were coming to a presidential and Senate and just a major election timeframe. So there's a lot of indecision going on here. Nobody knew. But what we knew is that we were in a bull quiet regime. And so as we get to a catalyst moment, most likely what's going to happen is a catalyst is going to show up and it's going to resolve to the upside. We also knew, and we talked about this earlier this week, that how fast we moved off and how everything was moving, it could very well have been a neutral sideways regime, which is also fine. Because if we understand the macro, which is what a lagging indicator gives you, the macro environment tells you, you want to be buying towards the bottom of this range and you want to be selling at the top, taking profits in the middle. Or since we are still in that bull quiet and it looked, bulls might start pulling it back. Well, if we're in a bull quiet, we're just always looking to be long. And yeah, we can spend a month not looking super impressive to all our friends, but it's worked pretty well so far this year as we were long the whole way through. So this is why understanding lagging indicators is so much more important than understanding leading short-term day trading, whatever, these short little indicators. If you understand where the tide is going to be going, you don't have to work so hard. You can just jump in the stream. You can jump on the wave, just kind of let it push you there instead of fighting out. That's basically what we've got going when we're in this strongest of all market regimes, which is the bull quiet. And you know what? It's not the first time that we've been in sideways in a bull quiet and things have been, a little herky jerky. but eventually it resolves back to where we need to be. When we find ourselves in that bull volatile, we know that we're going to be looking to take profits, or we're going to be lighting our positions, or we're going to put a little hedge on. That's it. That's about the only thing we need to worry about there. We're just going to lighten our exposure. We want to have most exposure long in this environment. And especially if things are substantially bearish and ugly, and everybody is very pessimistic and thinking that the world is going to end, that's when you want to say, okay, cool. I just need to find somebody to be just bullish enough that flips that. And you're going to hear a bunch of bad news, and one little thing of good news comes in according to the market, not according to your interpretation or Twitter's interpretation or the TV's interpretation, but the market's interpretation. You can jump on board with that. This little pattern down here gave us some pretty good insight into what was going to be happening. But, you know, there was a lot of selling, and we did have bulls fully take control. Bears fully take control. Bulls tried to pull it back. They lost it. Bulls came back a little bit. Bears couldn't do much else with it. And this is where we get into price action. Bears couldn't do too much with it. And then yesterday, bulls stumble back. And then when you have a catalyst, now you have to understand this was all indecision, no catalyst area within the higher regime that says this is what's happening. So if you're surprised about the upside move today, who knows what it's going to do for the rest of the week. But if you're surprised at an upside move based on either outcomes, and if you're betting that the outcome was anything that's going to be anything different than this, then this is what I'm talking about, understanding lagging indicators and how they can really keep you on the right sides of the trade. They can keep you in the market longer. That's what kept me in. These are things that keep me in the market from August till September, well, end of August. I'm sorry, April to the end of August, long, while everybody else was screaming and yelling about the bearishness and the coronavirus and all these other logical things that they would want to say. Why are we going down if all this and this and this? And I say, because we're going up. And I understand the lagging indicators are telling us that we've got a lot of opportunity to go up. The day-to-day, the news, all that other drama does not matter when we're talking about this. So that's it, guys, for today. I want you to go ahead, like and subscribe, comment down below, get on our email list, pollinatretrading.com/subscribe, and you'll get notified when we have videos. Also, I do a lot of writing on this for free, as opposed, it's all that part's free. We have other products for sure. That, you know, if this stuff is interesting to you and you want to go down deeper on those, then you definitely can speed past that by either joining us in the lab or signing up for the courses and being armed with the information of what professional prop traders who trade at professional firms do to make money day after day, week after week, year after year, decade after decade. All right. That's pretty much what I have for you today. There's not a lot much else going on. We're paying attention to the election, of course, but paying attention to outcomes more than anything.